Sofia, what a week. What a week.
Yeah, capitulation on Monday and then a little bit of a consolidation. You talked about a pop. I call it more of a dead cat bounce. I mean, it's not like the market is still down for the week. There's still a lot of nervousness in China, and you said that global stocks are heading for a weekly gain. Not in China.
Yep.
It's still very much a down week. And looking ahead, I mean, today's the busiest earnings day for Asia of the season. I'm looking here. It's about $3.3 trillion worth of companies reporting today. We have BYD, ICBC. That could give the market some direction. But so far, it's a market that's trading on sentiment and not fundamentals, and that's set to continue. And I'm sure Rebecca can talk a little bit more about what sentiment is right now.
What is sentiment now, Rebecca?
Well, I think we did sort of see this fundamental question about what the future is of Chinese capital markets and Chinese financial markets. Sophia and I have written a lot about this clash between communism and capitalism. And Xi Jinping, after a decade of opening up China markets, showing really very clearly that that is no longer a priority and that domestic priorities will be served first. And increasingly, of course, is also this geopolitical risk where we're looking and eyeing at this risk that, the economy and the capital markets become more a function of economic statecraft rather than, for example, prioritizing drawing in fresh capital, particularly from those offshore investors.
Sophia, let me bring you in on that point then. I mean, is what happened this week more a function of because we didn't hear anything so much on the economy and markets, this sort of vacuum of information? Or do we get something that's actually positive for these markets? You have the work conference coming up, you have the 2 meetings, for example, in March. Do we simply is it a function of patience is what I'm trying to get to here?
The vacuum of information has actually been a function of this market for a long time, and communication has not been Xi Jinping's strong point. It's not a priority, as Rebecca said, communicating with the market, unlike in places like the US and the UK, where the markets almost dictate policy or overthrow governments. That's not the case in China. It's not a priority. And I think the question that Rebecca and I were trying to answer this week, especially after that massive capitulation on Monday, is, what do capital markets look like in Xi's new China? Is it still a capitalist, communist kind of marriage? Will that still work? And what's clear, what was made clear after the party congress, is that everything is subservient to what the party wants, what the party wants in terms of control, but also in terms of Xi's vision. And that was what really spooked investors this week. And I don't think that's going to change.
Yeah, how he's consolidated power and what he's going to do with that power, that leads to a lot of concerns. But then, in terms of priorities, is there even a chance that the president can maybe reprioritize growth in the longer term now that he has consolidated this power? That seems to be where the bulls, at least, or the optimists are still thinking.
Well, the economy, as many analysts have pointed out, is Xi Jinping's Achilles heel here. He does need to tackle that problem in some way. The indications from the speech are that he is making a bet on innovation, on science and technology that will help boost the economy, but also reduce its reliance on, the tech of US, its allies, and Asian allies, and so on. So that, I think, is the premise. And there could, of course, be some sort of capitulation. But the other question, I think, is who actually has been kind of levered and elevated into the highest echelon of the party. We have seen the exit of these really key reformers who have overseen some of China's most turbulent financial periods in the past. Figures like Liu He, and even old-time figures, Wang Qishan, who's associated with foreign policy, but oversaw GITIC, the first ever default and bankruptcy in China's history. So there's all of this sort of exit of the old guard, which does sort of change or bring at least this question to mind about who is going to oversee if they did want to start looking again and prioritizing market growth.
Very quickly here, Sophia, 4 minutes regarding the fix for the days out. Just key thoughts on the currency.
So we've had a stronger bias for 42 days. If we do get a weaker bias today, that will obviously be a strong signal. I would say unlikely. What's interesting is if the PBOC reverts to anchoring the currency like it did during the party congress, because what's happened this week is the central bank has let the currency go, has a kind of accepted dollar weakness. So if we do revert to a more managed currency, more stable currency, that will also be a kind of a starting point for next week. Yuan weakness is still going to continue, but in a managed way and in a slower way.